सो वेरी गुड इवनिंग टू ऑल। दिस साइड रुपी आहूजा एंड हम लोग आज शाम डिस्कस करने जा रहे हैं गोल्ड मार्केट के फ्लक्चुएशंस के बारे में, और इसके बाद ही हम लोग डिस्कस करेंगे कि आगे का मूव कैसा होने वाला है, पिछले वीक का मूव कैसा रहा और कुछ डेटा सेशंस। सो डिस्कस करने से पहले हम लोग जानना चाहेंगे आप लोग को आवाज़ क्लियर है और स्क्रीन प्रॉपरली विजिबल है? इफ़ यस काइंडली प्रेस 1 ताकि हम लोग आज का सेशन यहाँ से स्टार्ट कर सके। काइंडली प्रेस 1 इफ यू वांट मी टू स्टार्ट द सेशन फ्रॉम हियर ताकि हम लोग डिस्कस कर सके बाकी सारी चीज़ें। काइंडली प्रेस 1 इफ यू वांट मी टू स्टार्ट द सेशन फ्रॉम हियर ताकि हम लोग डिस्कस कर सके। ओके, सो हम लोग जैसे कि गोल्ड के बारे में देख रहे हैं, देख सकते हैं हम लोग स्लाइड से। गोल्ड रिकवर्स ब्रेकिंग द साइकिल ऑफ लोअर प्राइसिंग over the last 3 weeks. Points to be discussed today: gold traded a lower high, a lower low, a lower close. Gold futures had only fractions gains, and the US dollar and US debt. The future direction of gold: gold markets looking for floor, gold markets running into exhaustion. So gold traded a lower high, a lower low, and a lower close. Recent selling pressure in gold has been a result of dollar strength and rising yields in the US trade instrument. Looking at weekly charts on Tuesday, September 28, it appeared that gold could close lower on the week, marking the fourth consecutive week that gold traded to a lower high, a lower low, and a lower close when compared to open on Monday. तो देखने को मिला था ट्यूसडे की। अगर हम लोग बात करें सितंबर 28, तो पूरी तरीके से उम्मीद की जा रही थी कि ये जो हम लोग की टेरिटरी है, लगातार चौथी टेरिटरी हम लोग को गोल्ड के लिए डाउन होती हुई दिखेगी, लेकिन ऐसा होते हुए नहीं दिखा है एक्चुअली। जो क्लोजिंग हम लोग को देखने को मिली है कहीं ना कहीं पॉजिटिव होती हुई दिखी है और अपनी मंडे ओपनिंग से ऊपर होती हुई दिखी, इसलिए 14 कंसेक्यूटिव हम लोग को डाउन साइड मूवमेंट के बाद एक बार अपसाइड स्विंग देखने को मिला है। 1760 में हम लोग कहीं ना कहीं क्लोजिंग देखने को मिली है। Gold futures had only fractional gains. So, however, the dramatic and strong upside move in gold futures yesterday of $34 changed the dynamics of week. Today, gold futures had only fractional gains, but even a functional fractional gain after the strong gains from Thursday change a weekly candlestick from red, which is drawn if gold or commodity closes below the opening price, to a green candle which is drawn if a stock or commodity closes above the opening price. देख सकते हैं हम लोग गोल्ड फ्यूचर्स हैड ओनली फ्रैक्शनल गेन्स। तो देख सकते हैं हम लोग कि लगातार वापस से 3 टेरिटरी के बाद वापस से थोड़ी सी फ्रैक्शनल गेनिंग के साथ अब एक बार अपसाइड मूव होते हुए दिखा हम लोग को थोड़ा सा। वीकली रेंज कंटेन lower high and lower low. The weekly range did contain a lower high, a lower low, but gold futures closed today above the open on Monday. तो हम लोग देख सकते हैं कि जिस तरीके से हम लोग देख रहे थे कि लोअर हाई लोअर लोज बनाते हुए जा रहा था, तो उस तरीके से उम्मीद की जा रही थी कि गोल्ड एक बार वापस से नेगेटिव टेरिटरी में हम लोग को क्लोजिंग दिखाते हुए मिलेगा इस बार भी। लेकिन जैसे कि देखा जा रहा है कि मंडे की क्लोजिंग के बाद मंडे के प्राइजेस से हम लोग को फ्राइडे के प्राइजेस अपसाइड देखने को मिल रहा है, जिसकी वजह से क्लोजिंग वापस से अपसाइड होते हुए 1760 तक के लेवल्स पे देखने को मिली। The question becomes whether or not this week's fractional gains can be labeled as a key reversal, a pivot from bearish to bullish market sentiment, or simply an upside bounce followed by some more selling pressure. The US dollar and US debt. So, the rise in both the US dollar and US debt has, for a large part, been predicted on the belief that the Federal Reserve will begin to unwind, that is, taper their monthly asset purchases of $120 billion soon. Another factor on the radar of the investment community is the potential crisis that would result if Congress and Senate cannot pass legislation to raise the debt ceiling from October 18. So both the House and Senate approved a stopgap measure to fund the government through December. Still, they didn't come with any legislation to address the current debt limit, which could cause the United States to be unable to make payments on its debt. Although there have been government shutdowns in the past, the United States had always made interest payment on the national debt. Secretary Yellen's testimony. So, the Secretary of Treasury, Janet Yellen, and Fed Chairman Jerome Powell testified before the House Financial Services Committee. As I spoke about in our opening letter yesterday, during Secretary Yellen's testimony, she made a dire prediction if the United States can't meet its debt obligations. The debt ceiling, so this will only occur if Washington is unable to pass the legislation to raise the debt ceiling. According to the Treasury Secretary, the government would not be able to meet its financial obligations if by October 18 no legislation is passed to raise the debt limit, which is currently restricted at $28.4 million. So the future direction of gold. The future direction of gold will be largely based upon the future monetary policy of the Federal Reserve. तो गोल्ड का जो आगे का मूव जो डिपेंड करेगा वो पूरी तरीके से मॉनेटरी पॉलिसी पे डिपेंड करेगा, फेडरल रिजर्व के द्वारा जो भी हम लोग को पेस्ट होती हुई दिखेगी. So the Fed has invoked an extremely accommodative after the pandemic began in 2020, resulting in a deep recession worldwide. As the economic recovery in the United States strengthens, the Federal Reserve will begin to unwind the dramatic steps it took to temper the recession and aid in the economic recovery. FOMC मीटिंग के बारे में डिस्कस करेंगे, बट उसके पहले एक बार क्लियर कर दीजिए अभी तक सब कुछ क्लियर है. इफ यस काइंडली प्रेस 20 ताकि हम लोग डिस्कस कर सके कि व्हाट हैपेंड इन FOMC मीटिंग. So what happened in FOMC meeting? So at some point, most likely beginning next year, the Fed will begin to normalize interest rate, which they took at 1 by 4%. So the recent projection of interest rates released by the Federal Reserve in the month's FOMC meeting dot plot suggested that in the process of normalization, taking interest rate from near 0 to 3% would be implemented over the next 3 years. The Federal Reserve's statement and Jerome Powell's press conference. So the Federal Reserve's statement and Jerome Powell's press conference also revealed that they would begin the process of tapering their asset purchase to early as November of this year. Analysts and investors still do not know the pace of tapering process. Although it is believed that they would taper their purchase of US debt instrument and mortgage-backed securities with monthly reductions, which would take roughly a year until tapering result in no more asset purchases. The Bureau of Economic Analysis. So, lastly, the Bureau of Economic Analysis today released the PC numbers for August. The report revealed that the inflation continues to grow, with the August number showing that the PCE price index increased 0.4%, excluding food and energy. The report made the following statements: personal income increased 35.5 billion. The report made the following statements: personal income increased 35.5 billion in August, according to estimate released today by the Bureau of Economic Analysis. Disposable personal income. That is, TPI increased $18.9 billion and personal consumption expenditures increased $130.5 billion. Our real DPI increased 0.3% in August and the real PCE increased 0.4%, concluding that the PCE price index increased by 4.3% from 1 year ago. Gold market looking for floors. So gold market have fallen quite a bit during the week, only to turn around and show signs of life again. But doing so, we are forming a little bit of a hammer for the weekly candlestick. Gold market have fallen bit during the course of the trading week, but then turned around the recover. When they did, we ended forming a bit of a hammer, which of course a bullish sign. With this, it is very likely that we continue to see the market as being one that we will move right along with the US dollar, as there is a major negative correlation between these two markets. If we break down below the bottom of the candlestick through, it is very likely that we go towards 1680. That is the area that, of course, has been massive in its meaning. So, if we were to break down below there, we go. I think gold will collapse. So gold market have gone back and forth during the course of the trading session on Friday as we continue to see the US dollar for the things around. Gold markets went back and forth during the course of trading session on Friday. As it looks like we are going to continue to respect the 1765 level as we have pulled back from there. Gold market running into exhaustion. So that being the case, it looks like we are running out of momentum and therefore it will be interesting to see what happened next week. If we break down below the bottom of candlestick for the trading session on Friday, then it is likely that we go looking towards the lows again. The size of the candlestick on Thursday was rather impressive, but it is worth nothing that this is an area we have seen trouble at before. So हम लोगों ने ये चीज़ें डिस्कस कर ली हैं, आगे हम लोग आएंगे डिस्कस करेंगे गोल्ड स्पॉट goldnetdehnia.com के बारे में, बट उसके पहले एक बार क्लियर कर दीजिए आप लोग को स्क्रीन प्रॉपरली विजिबल है और अभी तक सब कुछ क्लियर हो रहा है. इफ़ यस काइंडली प्रेस 20 ताकि हम लोग आगे की चीज़ें स्टार्ट कर सके डिस्कस करना. ओके, सो देख सकते हैं गोल्ड नेटेनिया.com पे गोल्ड के प्राइजेस की क्लोजिंग हम लोग को 1760 के आसपास देखने को मिली है। रेंज जो हम लोग को देखने को मिली 1748 का लो बनाते हुए 1764 तक का हाई, और क्लोजिंग जो हम लोग को देखने को मिली 1760 के आसपास। 7.67% की तेजी के साथ हम लोग को गोल्ड क्लोज होते हुए दिखा वीकली क्लोजिंग दिखाते टाइम। प्रीवियस ओपनिंग देखने को मिली थी हम लोग को 1752.99, और उसके साथ क्लोजिंग हम लोग को जो देखने को मिली थी 1752.98। अभी जो प्राइसेस चल रहे हैं उस हिसाब से ईयर वाइज परसेंटेज चेंजेस की बात करें तो 7.08% की गिरावट के साथ 134.23 पॉइंट्स की गिरावट के साथ फिलहाल देखने को मिल रहा है। 52 वीक्स हाई 1965.55, 52 वीक्स लो 1676.10। गोल्ड न्यूज एफएक्स ट्रेड की बात करें सो एक्सएयू यूएसडी हैज अ सॉलिड पेस आफ्टर द क्विक रिकवरी। So when what goes down must come up. After gold trembles down towards 1700, it bounced quickly and is trading above 1750 at the time of writing. The better market mood has pushed the dollar lower, and the precious metal is benefiting from the dollar's decline. The technical confluences detector is showing that gold price has support at 1754, which is a cluster including the Bollinger Band 15-minute middle, the simple moving average 10 to 15 minute, the Fibonacci 23.6% one day, and several additional lines. A more considerable cushion towards awaits at 1748, which is where the all important Fibonacci 38.2% one day and Fibonacci 23.6% 1 month. Looking up, some resistance awaits at 1764, which is the meeting point of the previous day low, and Fibonacci 38.2% one day. The next target is 1771, which is the confluence of the Bollinger Band one day middle and the pivot point one day resistance one meet. Fundamental overviews की बात कर ले so gold price is struggling to extend Thursday's rebound this Friday, although remains well supported at 1750 level. As of the Q4 2021 kicks off, the bright metal is looking to end the week almost unchanged, as the blistering recovery has helped the bulls for some respite, as gold price is poised to end its three straight weekly losses. The retreat in the US Treasury yields amid risk of market mood keeps the buoyant tone intact around gold price. Investors remain wary amid a delay in the US political wrangling and Fed's tapering risk in the light of surging energy prices and slowing global economic recovery. So देख सकते हैं 1 week की average forecasting 1749.25, for 1 month 1740, and for 1 quarter is 1733.82. सो गोल्ड वीकली फोरकास्ट पे आ जाते हैं. सो गोल्ड वीकली फोरकास्ट XAU USD appears sell and bounce ahead of all important NFP. So Thursday's rebound saves the day for gold after a terrible week. Fed's tapering calls, risk of mood underpin the dollar. Yields take a breather. XAU USD's technicals are pointing to further downside potential. The FX poll is showing gold is unlikely to take a substantial recovery. So will cold surprise sustain the comeback from multi-week troughs? The week saw gold witnessing massive volatility despite limited first-tier US macro news. As fresh sentiment and US political drama led the way, an intensifying global energy crisis, the China Evergrande debt issue, and the Fed's tapering fears kept investors on the edge, benefiting the safe haven US dollar at gold's expense. However, the quarter end flow came to the rescue of gold as the price managed to reverse most of its weekly losses, snapping three straight weekly declines. Gold in the hindsight. So, in the first half of the week, gold price heavily suffered and reached 7 week lows of 1722 as the previous week's hawkish shift from the Fed drove the US Treasury yield through the proof roof while lifting the greenback alongside. Additionally, the several appearances by the Fed Chair Jerome Powell and speeches from his colleague amplified expectation of sooner than expected tapering as the market began pricing in a rate hike in 2022. The hawkish Fed expectations were reflective of the underlying economic optimism. आगे डिस्कस करने से पहले एक बार क्लियर कर लेंगे आप लोग को सारी चीजें क्लियर हो रही हैं इफ यस काइंडली प्रेस 30 तक ही हम लोग आगे की चीजें डिस्कस कर सके काइंडली प्रेस 30 इफ एवरीथिंग इज क्लियर टिल नाउ ताकि हम लोग आगे की चीजें डिस्कस कर सकें So further soaring oil and gas prices ramped up inflation expectation, adding to the Fed's tapering calls. US inflation expectations measured by the 10-year break-even inflation rate per the St. Louis Federal Reserve data climbed to two-week highs near 2.40% on Tuesday. Meanwhile, the benchmark 10-year Treasury yield rose to 3-month highs of 1.567%, sending the US dollar index to the fresh highly years near the mid 94.00. By midweek, the attention gradually started to drift from the Fed's tapering plans to accelerating tensions over the global energy crisis. In the wake of the persistent rise in the gas and oil prices, the euro area and the UK experienced empty pumps, which threatened to shut down factories and derail the economic recovery. Similarly, unprecedented power cuts in China have brought the factories to a halt. Against this background, significant worries hit the markets, with the risk of mood reviving the demand for the safe haven asset, such as US government bond. The Treasury yield thereafter corrected sharply from monthly month highs, putting a floor under gold prices. The US political drama on dual fronts also started coming into play that in the second half of the week, weighing on investor sentiment and helping the buck maintain its bullish momentum. US Senate Majority Leader Chuck Schumer said on Thursday that lawmakers agreed to extend government funding through December 3, averting an imminent shutdown. Although the debt ceiling in mid October still lurks amid the political wrangling. Further, a delay in the House vote on US President Joe Biden's infrastructure bill spooked investors once again, bonding well for the dollar. Thursday's upward revision on to the US final quarter to GDP offset the rise in the jobless claims, pushing the dollar index to fresh yearly tops as gold price held into the rebound amid the worst week of the US stock since March 2020. So it is going to be a quite start to the non-farm payrolls week this Monday, dropping in the US factory orders, which is unlikely to have an impact on the Fed's tapering expectations. सो डिस्कस करेंगे बाकी की चीजें उसके पहले एक बार प्रेस 40 ताकि हम लोग आगे की चीजें डिस्कस कर सकें. So it is going to be a quite a start to the non-farm payrolls this month on this Monday on dropping in the US factory orders, which is unlikely to have any impact on the Fed's tapering expectation. Further, the Chinese market will remain closed through Thursday, allowing limited volatility during the Asian trades while gold price remains choppy. Next Thursday, relevance for gold traders will be Tuesday's US ISM services PMI with the employment subindex in the focus ahead of Wednesday's EDP non-farm employment change. Comments from Atlanta Fed's President Raphael Bostic will be closely followed for fresh hints on the Fed's tapering policy next action. On Thursday, the US Department of Labor's weekly initial jobless claims report will draw some attention alongside. On Thursday, the US Department of Labor's weekly initial jobless claims report will draw some attention alongside New York Federal Reserve President John Williams' speech. Friday will bring in all important US market report with the headline NFP foreseen at 500K in September versus August terrible print of 235K. The NFP data will be closely eyed as it will indicate clear progress of Fed's maximum employment goal. Apart from the economic data, gold price will remain at the mercy of the dynamics in the yields and broader market sentiment. Meanwhile, investors will keep their eyes on the US political scenario and the unfolding global energy crisis. टेक्निकल आउटलुक की बात करते हैं. So XAU USD is trading below a downtrend resistance since mid-September and has dropped below the 50 days, 100 days and 200 days simple moving averages. Momentum is to the downside, and relative strength index is well above 30, allowing for more falls. Support awaits at 1720, which was September's trough, also cushioned the previous metal back in April. It is followed by August swing, low of 1690, close by 1680. If the interest rates. So resistance awaits at early October high of 1760, followed by 1785 and 1800. Gold sentiment, so FX pool is pointing to drops in the short and medium terms, but bounce later on. Hence, however, despite an upgrade to the projection, they do not foresee a recovery towards the 1800 levels. So precious gold firms as dollar slips poised for weekly gains. Palladium platinum to set to the drop for the week. Dollar eases from the 2021 high. Gold set for the first weekly gain in month. October 1st, gold inched higher on Friday as a weaker dollar and worries about rising inflation and risk to the growth countered bets for looming interest rate hikes, keeping bullion on course for a small weekly gain. Spot gold was up 0.1%. Spot gold was up 0.1% at 1759 per ounce by 1:47 p.m. EDT. US gold futures settled up 0.1% to 1758. The dollar pulled back, making gold less expensive in other currencies, encouraging demand. Gold was on track for its first weekly uptick since September 3, rising about 0.5% so far as a retreat in the dollar on Thursday helped it bounce about 2%. Dips in the dollar and lower bond yields are supported gold, while investors reposition for a fourth quarter, said Philip Stribel, chief market strategist at Blue Line Futures in Chicago. Helping gold's appeal, European and Asian stocks fell on worries about inflation and possible slowdown in growth. Anyone trying to convince market participants that inflation is not here, that's a fool's game. Adding that the soaring energy prices due to a crunch in China and Europe will likely hit growth and earnings and lead to a volatile October with support gold. Prospect that US Fed may still wind down economic support this year pressured gold, some analysts said, since reduced stimulus and interest rate hikes to push government bond yields up. Silver added 1.5% to $22.53 per ounce, as was up 0.5% for the week. Platinum rose 1.1% to $974.41, and palladium rose 0.8% to $1924.18, but both were set to fall for the week. Apart from semiconductor tightness hurting the automobile industry amid low liquidity, palladium's decline also driven by the general weakness across the industrial metals coming out of China. आज आते हैं फॉरेक्स फैक्ट्री डेटा पे एक बार. सो फॉरेक्स फैक्ट्री डेटा की अगर हम लोग बात करते हैं तो मंडे को हमारे पास जो डेटाज आने वाले हैं शाम को 6 बजे, बिल्डिंग परमिट्स मंथ टू मंथ एंड फैक्ट्री ऑर्डर्स मंथ टू मंथ, जो कि इंपॉर्टेंट नहीं है। ट्यूसडे को हम लोग को जो इंपॉर्टेंट डेटा देखने को मिलने वाला है 7:30 बजे, जो इंपॉर्टेंट डेटा हमारा एसएम मैन्युफैक्चरिंग एसएम सर्विसेज पीएमआई का, जो कि बहुत इंपॉर्टेंट डेटा है हमारे लिए। इसके साथ ही 8:30 बजे, सॉरी 11:15 बजे एफओएमसी मेंबर कॉरेलिस स्पीक। वेनसडे की बात करें तो वेनसडे हमारे पास जो इंपॉर्टेंट डेटा है एडीपी नॉन फॉर्म एम्प्लॉयमेंट चेंज, FOMC member Bostic speak, crude oil inventories and FOMC member Bostic speak again. थर्सडे 7 October हमारे पास जो डेटाज है वो है अनएम्प्लॉयमेंट क्लेम्स, FOMC member विलियम स्पीक, नेचुरल गैस स्टोरेज। फ्राइडे को बहुत ही ज़्यादा इंपॉर्टेंट डेटा, अनएम्प्लॉयमेंट रेट, एवरेज अर्ली अर्निंग्स मंथ टू मंथ, यूएस नॉन फॉर्म एम्प्लॉयमेंट चेंज एंड अनएम्प्लॉयमेंट रेट। आगे की चीज़ें डिस्कस करेंगे उसके बाद, उसके पहले एक बार क्लियर कर दीजिए सारी चीज़ें क्लियर हो रही हैं। इफ यस काइंडली प्रेस 50 इन द चैट बॉक्स। सो हम लोग मूव करते हैं अपने गोल्ड न्यूज़ kitco.com पे और हम लोग एक क्लिप देखेंगे यहाँ पे।
It has been a very volatile week for gold. After dropping $30 this week, the precious metal is once again back at its very familiar territory of $17.50–$17.60 an ounce. Soaring US Treasury yields and a higher US dollar were the main narratives for gold. And despite avoiding a government shutdown in the US this week, there is still the threat of default as the heated debt ceiling debate continues. Here's a look at Kitco's top 3 stories of the week. At number 3, Robert Kiyosaki warns of a giant October market crash as he holds gold, silver, and Bitcoin. The best-selling author of Rich Dad Poor Dad tells Kitco that it's going to be the biggest crash in world history, stating that the debt-to-GDP ratio is out of sync. Kiyosaki's warning comes with some investment advice. Hold on to your gold, silver, and Bitcoin positions and use cash to bargain hunt. At number 2, the Yellen-Powell duo gave mixed signals to the gold market in their 2-day testimonies this week. During the first day of testimony, U.S. Treasury Secretary Janet Yellen controlled the market's reaction as she warned that failure to raise the debt ceiling would trigger a financial crisis.
America would default for the first time in history. The full faith and credit of the United States would be impaired, and our country would likely face a financial crisis and economic recession as a result. We must address this issue to honor commitments made by this and prior Congresses, including those made to address the health and economic impact of the pandemic.
Yellen also said that it would undermine confidence in the dollar as a reserve currency. In response to these comments, gold saw double-digit losses as the U.S. Treasury yields climbed to 3-month highs and put downward pressure on the metal. And coming in at number 1, gold's 180-degree flip as Federal Reserve Chair Jerome Powell testified on Thursday that the U.S. is still far from full employment. The dovish comment pushed gold $40 higher as the U.S. dollar index also hit daily lows. At the same time, Powell was grilled on inflation, with the Fed chair sounding unsure about when the price pressures could abate. He stated, "We do think that inflation will remain elevated until supply bottlenecks are resolved, but exactly when that will happen is not possible to say." And with the looming energy crisis stirring up inflation fears, many U.S. lawmakers are no longer sure that the price pressures are as transitory as the Fed says. On crypto, Powell clarified his earlier statement from July, saying that the Fed has no intention to ban cryptocurrencies. That's a look at our top 3 stories of the week. Thanks for watching. Don't forget to subscribe, and for more headlines, check out kitco.com.
Bill Baruch is back. He is the president of Blue Line Futures. Welcome back, Bill. Lots to talk about with the markets. We missed you.
Thanks for having me on again. It's great to join you.
Stock markets. Let's talk about that and start with the broader equity markets. Now, we've had a bit of a fall from the peak in the S&P 500 in mid-September. As an investor, some might ask you, well, Bill, is this drop going to continue? Or can we see a bottom anytime soon? Basically, should we be selling our positions now?
No, I don't think so. Let me say first, risk management is important. And, there's been, we had a little more cash than normal going into the last couple of weeks. I've used protection for clients and portfolios, whether it be, in the Qs or SPX, been trying to protect some downside. So risk management is always important, but I don't see a reason to be, unloading stocks at a high clip here. I mean, if anything, you really want to be looking at for a buying opportunity if you aren't fully invested. And that's what we've done with new clients, throttling them into positions. But I put a note out to clients in my regular morning note and said, it's a fresh start. It's a new quarter, it's a new month, it's a fresh start. And I went through, all the narratives, all the headwinds we've seen for the last couple of weeks, from quadruple witching and quarter end to Evergrande, the Fed taper, Congress, and laying it all out. But at the end of the day, there's a number of reasons why I'm still bullish stocks.
Okay, so you don't think this is the beginning of a new bear market? I mean, new month, new quarter, new bear market, perhaps?
No. In hindsight, you look back at seeing what the S&P did. When this market sold off last week, the rebound went right to that trend line that it broke, and it's been a very technical market. I was looking for an area here, 42.75 to 42.95 to hold. I know some people were looking at 42.60 to 42.70. And so whatever your technicals are telling you, so far there's been a big level that's held here in the market. But can it do it on a weekly closing basis? And I think we need to see it here this first day of the month to get a nice, good close here on Friday to get some good momentum going into next week.
What are some of the risks, the market risks that have, quote unquote, spooked investors over the last couple of weeks? Was it news out of China? Was it the debt ceiling debacle? Was it maybe it was just due for a healthy pullback? What do you think?
I think first, yes, due for a healthy pullback. Market was moving really just aimlessly higher. And once we broke through the 50-day moving average, once we broke that trend line that's been there for a while in the S&P, it did open the door for a larger scale correction, that 5% that we haven't seen in quite a while. There's been a lot. Evergrande was something that was under the hood through that quadruple witching week. That definitely was a reason for some additional risk off. You did see that some of that selling into that quad Friday where the market broke, and then behind everything else, into the next week, you had Congress deadlock. Janet Yellen, the U.S. Treasury Secretary, was definitely instilling some fear out there to Congress, and it worried the markets. And if the U.S. were to default on its debt, the Fed is going to taper, and that was something that was. Is there a taper tantrum going on? Obviously, you mentioned China. There's Evergrande. Some people are saying that the energy crunch that is taking place could be a bigger deal than Evergrande itself. So. Inflation is there. Costs are going higher. And one thing that noted yesterday that I think was ongoing weakness throughout the session was Bank of America downgraded Kohl's. And Kohl's is a stock that we own. I like it. I don't dislike it now just because it was downgraded. I think there's good levels in it to be looking at. But I like Kohl's as a stock, and they downgraded it because of supply chain disruptions. You saw a lot of these retailers that got hit really hard over the past week because of that, from Macy's and Nordstrom's, Target. Target's 15% from its highs. So there's been this correction that's been going on through leadership because of inflation, supply chains, and a number of reasons that I've mentioned here for a while.
You mentioned the possibility of a U.S. debt default. Well, I think it's fair to say that such an unprecedented event could trigger a major correction or sell-off. So I'm guessing, because you're still in the markets, I'm guessing you think that is an unlikely scenario for the U.S. to default on debt, right?
I don't think they are. I think that they are playing a really high-stakes game of chicken. And, I don't know anybody out there that really praises what Congress does on a daily basis. So I won't go into to worsening that narrative and criticizing them badly. But with that said, I don't feel very strongly about what they do and what they have done. This is a high stakes game of chicken, and really what we saw the stopgap bill passed, but it's really just a little Band-Aid here because we need to get the debt ceiling raised, removed, whatever they want to do, however they need to do it to get it done, because the U.S. cannot default on their payments. And for the past couple months, I was looking at rates to rise. My reason for rates to rise, though, was that Congress was going to get their act together, and they were going to pass infrastructure. They were going to get the debt ceiling done, and then they were going to print more money, as they've been talking about. At the end of the day, they were going to get that done, and more supply of treasuries was going to force the more supply forced prices lower. The Fed was going to buy less, and that was going to be something that forced rates higher. So, at the end of the day, I was right. Treasury yields have gone quite a bit higher. The 10-year got to 1.56 this week, but I was right for all the wrong reasons. And it was actually the Congress that didn't at all get their act together. It's been a circus, and but it's not done yet. They need to get this debt ceiling taken care of, or we will see higher rates, and that's going to hurt the tech side more than anything. So it's still ongoing.
So what sectors do you like right now? What stock sectors do you like?
I've been really adamant that we're going to see energies and we're going to see financials outperform the second half of the year. They haven't, quite done that, up until a couple weeks ago. And now you're seeing JP Morgan basically within its highs. You're seeing American Express within its highs. A lot of these we own some good regional bank exposure. Silicon Valley Bank, was surging to highs. That I think the financials are going to do very well. We love energies. Companies like Marathon Petroleum and Chevron and Pioneer have done really well. You've seen things like Oxy get upgraded, and so I think there's some really good really good way to look at those being some sectors that are going to outperform. And there's really great names that still have some room to the upside. But I think overall we're looking at value, cyclicals, value that are going to outpace tech. We're seeing that here today. The Russell 2000 is up 1%. The Nasdaq's just a little bit in the red, and that's going to be part of the rising rate theme. I don't know if we had a high in rates here this week for the near term or not, but maybe the rally takes a bit of a breather here. Waiting on some more data, non-farm payroll next week, and then what does Congress do?
Okay, let's just touch on oil one sec, because you brought up oil. You're bullish on energy. You have been for a while. That was a great call, by the way. And Kathy Wood, I want to share one of Kathy Wood's tweets from yesterday. Listen to this. The rise in oil prices this year is a function more of supply than demand. At the turn of the 20th century, whale oil faced the same fate. And whale oil prices fluctuated dramatically. If ARK's research is correct, oil prices will suffer the same fate as whale oil prices. So she's comparing oil to whale oil, and she's saying basically it's going to fall. So is she right? It's a function. Yeah.
She's a very smart person. And she's done very well at what she does. I mean, their narrative. If I'm not mistaken, it's not about making money today so much. I mean, they had a tremendous year last year, and that got them a lot of attention, but it's more about, where they're going to be in the next 10, 20, 30 years. And listen, I don't think crude oil is in the need for the petroleum is going to go anywhere in the next decade. But you are seeing here, these are policy decisions in Washington. These are policy decisions from OPEC. These are policy decisions in Europe, and that is driving these prices higher. It's not a coincidence that you have a Democrat office and you have oil prices, higher, multi-year highs, basically. And I think there is higher to go on a technical basis in the near term. To this weakness on this week held 73.5 to about 73.90 was a big level that we wrote in our morning notes to clients to watch for, and it proved to be a buying opportunity. We got a little bit of a fundamental help yesterday when China told their energy companies to get supplies at any cost. And we're seeing crude hang up here above 75 for much of the day, even though OPEC is talking about bringing back a little more production. I think what's offsetting OPEC's talk yesterday about bringing back more production is this Delta variant subsiding. I mean, COVID's still there, and some of the countries are still battling it at some of the worst conditions they've had. But at the end of the day, the vaccines are people are vaccinated, or they've had COVID, and there is basically a herd immunity that is taking place right now. And then you got the news with Merck with the pill to give yourself safety before potentially coming across COVID. So I think what we're seeing here is a welcoming of demand on the energy side, because travel is going to pick back up. Yeah. You're also going to see some bottlenecks that are going to subside, and that's going to create additional demands. So I'm very bullish on where crude oil can be, and I'm not the only one, because you've got Goldman Sachs saying a cold winter is going to get you above $90, and Brent was above $80. We're backed off a bit. You're 78.5 here today. So I remain very bullish as long as the landscape remains technically constructive.
Well, we're already almost at $80 on the WTI. Can we see 100 anytime soon?
I've been saying this. I think I was on your show a couple months ago. I was saying I will not be surprised to see $100, and I think it's very likely we could see $100. Over the next 12 to 18 months, meaning through the first half of next year, or potentially at the latest end of 2022. I think that's what we're going to see. I think this, again, for all the reasons I just stated, that we're going to see. I mean, it's the reopening of the reopening, basically. I think we're going to have here in the next couple months.
Okay, let's talk about monetary policy and the precious metals now. Touching on the Fed, last time we spoke was in August. Now, we did have one more Fed meeting in September since then. And one thing that was interesting to me was that if you look at the dot plots in September, in the last meeting, you had 9 Fed members thinking that a rate hike would happen next year, and 9 Fed members thinking that a rate hike would happen in 2023. So it was pretty evenly split on 2022 versus 2023. Now, that has shifted because before September, more Fed members thought that a rate hike would only happen after 2022. So the sentiment has started to shift to an earlier rate hike timeline. What do you think? Do you agree with what this change may signal?
I've overall been, a Fed applauder, and I have criticized a bit, like I think it was June, after how they quickly raised those inflation expectations before really getting the third read. But overall, I've applauded what they've done, and what they've done here with the taper that's coming. And then I'll get to answering your question because by answering this question too. Sure. And what they've done is really get the market is very ready for this taper. It's well prepared, and on top of that, talking about Congress for a second again, there is an argument here that we could see net issuance decrease if Congress doesn't really need as much money as initially anticipated a few months back. We could see net issuance from Treasury, not as much as initially anticipated, and the Fed's buying less, which really, but there's a net decrease overall. So that really stabilizes risk assets. So that's something that I think you're seeing this work together very well. And so the fact, again, now to answer your question, the Fed has brought those expectations up a little bit. They are probing the market, and they are setting those expectations at a time that it can be set. I think they've done a good job. And will they be able to raise rates at the end of 2022? I don't think so. But that is a reason, and this may go into your next question. That's the reason why I like gold, and I think it's one of the reasons why those expectations have kept gold under wraps. But now I think that once those expectations are proven that they really can't do that, gold's going to shine.
You read my mind. That was my next question. So gold has been held back by, you mentioned, rising treasury yields and, of course, a strengthening U.S. dollar. The DXY has been continuously going up. Now, Bill, can these forces reverse? We'll need them both to kind of stabilize downward before gold can see any sort of bid, right?
Yes. Yeah. Now, touching the treasuries here, I was on Fox Business earlier this week, and everybody's talking about the 10-year, 2% in the 30-year, and 1.5% in the 10-year. I said the levels you need to be watching actually are about 205, 206 in the 30-year. You have the 200-day moving average and another technical indicator there, and that's on the rate side. And then on the 10-year, it's more about 155 to 157, and these were really the highs of the day of the week, and the market, and the prices have buoyed, but the rates have obviously they've backed off now, and that's given a little tailwind to gold here this week. Silver flushed out, and gold really held. And I've been talking about it going back to yesterday. In my morning note to clients, said that silver flushing out was really the needed cleansing, and I really like the fact that gold held against the August 9th to August 10th. The price action there in that low at 1730, and that my morning note on gold does get posted to Kitco once or twice a week. But it's you can sign up for it on our website. But that price action I thought was very constructive, and silver did that cleansing. Silver was battling against $22 day in and day out. It needed to see what's under there, and now with the rate story rates backing off. And then now talking about the dollar, bringing the dollar into the mix, the dollar has backed off from the highest. It is not uncommon to see a currency ramp into the end of the quarter, and especially the dollar ramp up into the end of quarter three. Now, I think that was a little bit of safe haven from Congress. The dollar's backed off, and we're about a $0.5 index is 0.5% off of the high of the week. These have brought great tailwinds to gold and silver, very technically constructive, and gold. And then even though we got the wash down silver, 2110 to 2125 is a massive support level in silver, and buyers stepped in front of there. So I today, what we started working with clients to get long exposure yesterday. When we like that, we added to long exposure today. We like doing that through selling put spreads that expire for the November contract, which expired at the end of this month of October. Selling put spreads, you can look at something like 1740, 1730, 1740, 1710, and in November gold futures. You can sell that put spread, turn around and buy December, or even go farther on, go buy January call spreads and look for that as what's called a risk reversal, something similar in silver. We're actually selling in the money put spreads in silver. I think we're going to see these markets move higher. I think we'll see the dollar continue to go lower, and I think gold and silver can capitalize on just a stable environment in the treasuries. I don't think the treasuries have a reason to go either way right now. If they can just consolidate at these levels, it's going to be, I think, very bullish for gold and silver if the dollar backs off.
Excellent. Great updates. Thanks, Bill. Thanks for coming on today.
Thank you for having me.
And thank you for watching Kitco News. I'm David Lin. Don't forget to subscribe to our YouTube channel and follow me on Twitter at DavidLin_TV. We're talking all things silver today with Steve Penny. He is the publisher of the Silver Chartist Report. Steve, welcome to the show.
You bet, David. Thank you so much. I've been following you guys for a long time. First-time guest, but a long-time listener. So it's a pleasure to speak with you today. Thank you.
That's amazing. Thank you for being here. And I followed you on Twitter. You've got some amazing posts. And we'll be talking about some of your research today. Focusing on silver, I know you cover the uranium and gold markets as well. But today, primarily, we'll be talking about silver and your outlook for the metals. Silver has had a rough year, to say the least. A lot of people expected it to go higher for a variety of reasons. One of the interesting things I've noticed this year, well, myself and other analysts I've spoken to, is that silver has diverged from the gold price. Historically, they've moved in tandem. Silver has had a higher beta to gold, but this year, for some reason, if you look at the two variables next to each other, they don't seem to be moving in the same direction all the time. Why is that?
Well, I would not necessarily agree with that over the long term. You could that's certainly a true statement over the last few months. But if you look at the gold to silver ratio, something I track very closely, going back to March of 2020, that ratio had reached an extreme that's never been seen before, about 130 to 1. And then very quickly, that ratio compressed down to about 65 to 1 in August of last year. So that ratio had moved really far, really fast. So I think what we're seeing here is just kind of a little bit of a backing and filling in that ratio, where we sit, last I checked, somewhere around 75 to 1 or so. But I do think that silver will continue to move in the same direction as gold and outperform gold as the bull market resumes. Okay.
And let's talk about the gold-silver ratio now. So, as you said, historic levels, never before seen before. We've come back down since 120, 130. Historically, it's hovered around, I would say, 50? Now we're still higher than that. What's your outlook for the gold-silver ratio? Where should it be, according to your analysis?
Sure. Well, there's a couple of answers to that. You can look at mining output, and roughly it's roughly a 9 to 1 ratio, where silver is pulled out of the ground roughly 9 times in greater abundance than gold. So that's one ratio you can look at. You could look at a long-term historical ratio, and that's roughly 15 to 1. And 15 to 1 is interesting to me because that's typically where bull markets peak. So back in 1980, at the peak of that bull run, the price of gold was roughly 15 times that of silver. So I think in the fullness of time, in the next few years, we're very likely to see that ratio revisited, 15 to 1. Of course, that's going to take some time because we're sitting at roughly 75 to 1 now. But that would mean that silver outperforms gold by roughly a factor of 5 over the next few years. And I think that's a very logical path forward.
A decline of the gold-silver ratio down to 15 to 1 could imply one of two things. Either silver skyrockets to the moon or gold collapses. Which is more likely?
Well, I don't think gold is going to collapse. I think we've already seen most of the selling here. I'm not necessarily calling a bottom, but I think we're much closer to a bottom than a top in the metals. And like I said, I think silver is going to outperform going forward, but I also think gold will do very well.
Okay, and let's talk about the industrial component of silver. So let's circle back to the fundamentals now. What do you think are the core drivers right now?
Well, for the silver price, you mentioned industrial demand. That's a tailwind. Industrial uses for silver are only increasing, especially with electrical vehicles, solar panels, you name it. There's a lot of things, industrial uses for silver. But that's not my primary investment thesis, and the primary investment thesis is based on retail investment demand. If just a small number of general investors say, hey, I want to have exposure to just some silver, there's just not simply enough at today's prices. And historically, that's what drives, the kind of prices silver investors are looking for, north of $50. And I think that is coming. We're just waiting for a catalyst.
Well, silver investors might be wondering, we've had a number of industrial catalysts this year, the infrastructure bill, the long-term greenification of our economy that requires silver in a lot of different applications, industrial applications. So why hasn't the silver price moved this year?
Well, like I said, the industrial demand, that's a tailwind. But what we need to really see the price move is more generalist investors come in, retail demand. And we just haven't quite seen that yet. We do have the Wall Street silver crowd, and there's a constant bid for silver, physical silver. But we're not seeing the generalist investors shift en masse. They're still into, what I call the bubble assets, general equities and things like that. But at some point, they're going to shift. Value investors are going to shift over towards silver. And that's when we're going to see the really explosive moves higher, in my opinion.
Well, we did see the silver squeeze earlier this year from the Wall Street silver crowd. Right. That wasn't enough, you're saying?
Well, it was enough, but it's still a smaller subset of the general investment crowd. Like, you're not seeing silver talked about on Fox Business or CNBC or anything like that. People are going they're chasing momentum. And right now that's in stocks, tech stocks, and other assets. But at some point, that's going to shift. And one metric I like to track is the Dow gold ratio and the Dow to silver ratio. And we need to see the metals start to outperform stocks. And as that starts to happen, that's going to attract a lot of those generalist investors to take their chips off the table in these overvalued assets and cycle into things like silver and uranium and gold.
Okay. Isn't that kind of a chicken and an egg problem now, Steve? I mean, these mainstream media outlets that you mentioned, Fox Business, CNN, CNBC, they're not going to talk about silver or gold for that matter until the price moves. I remember mainstream coverage of gold. It hit a peak last summer when gold also, no pun intended, hit a peak.
Right.
But it doesn't seem like they were covering it before when there was no price action. So yes, we do need to see more mainstream adoption, but mainstream adoption is going to happen at these low volatility price environments. What do you think?
Yeah, that's true. And it's important to know, especially with silver, the price is set by supply and demand of paper contracts set on the Commodities Exchange, or the COMEX. And historically, the Commitment of Traders report is a good indicator, not necessarily of nailing the bottom, but of when a bottom is close. And what's interesting is that Commitment of Traders report in silver has greatly improved over this last few weeks. So we're seeing the banks starting to cover their short positions, and we see smart money posturing for or positioning for the next turn in silver. And I think that's going to be a big catalyst too when the banks start buying.
Why do the banks have short positions to begin with?
Well, that's a really good question. If you ask them, they'll say it's to hedge existing longs and for their clients. But I'm not one of these people who blames every downtick on manipulation. But I think there's a very good case to be made that silver is likely the most manipulated metal on the planet.
Mm-hmm. What do you mean by that? How is it being manipulated?
Well, on the COMEX, you can see that large sell orders come through at very illiquid times, and that's not the price. That's not the behavior of traders who would be looking to maximize profits.
Okay, so can you elaborate on that? They're doing what exactly?
So let's see. I'm trying to think of the most recent example. Like I said, I don't blame every downtick on manipulation.
I understand.
And I didn't intend to open up a can of worms, but if you go back, let's see, a few weeks ago, there was a really sharp sell-off in gold, something like $80, $90. I can't remember the exact date. And that happened at a very illiquid trading time. In the middle of the night before the New York traders are active. If you're a trader looking to get rid of your long positions, that's not how you would get rid of those. You would want to sell gradually into strength or into more liquid markets. That's just one example of how banks can potentially manipulate the paper price lower.
Well, Steve, I mean, that just speaks to the illiquidity of the silver market and the paper contracts and the COMEX altogether. I mean, isn't that the same argument as saying, well, a penny stock is being moved dramatically by, one seller selling a bunch of lots
Right.
overnight. But I mean, he may or may not necessarily be manipulating the market. He's just dumping his positions, right? But it's an illiquid market for that penny stock, and so therefore it's moved a lot.
Well, if you let's use that analogy. Let's say you owned a penny stock, you wanted to sell it, and you know it trades on very thin volume. I mean, are you going to try and sell that in off-market hours when you know there's no buyers there? No, you're going to scale out slowly in the most liquid hours. You're not just going to dump it all at once because you know you're not going to get the best price. And I think that's a great analogy for what we see in the silver market frequently.
Okay. So let's go back to the price now. So the price action we've seen over the last couple of months has been, if I can characterize it as being stale, that could I would use that word, but I'd like to get your opinion on how it's performed thus far according to your expectations as a silver analyst.
Yeah, and saying stale, I think that's putting it kindly. Let's just say it's been terrible. It's been just flat out ugly. I mean, if you told me back in August of 2020 that we'd be here in September of 2021 with a 21 handle in silver, most people wouldn't believe you. Almost everything is going up except for, silver and the things that should be going up in this environment. So it's extremely frustrating. And I sympathize with that. But, I'm a contrarian investor. And as a contrarian investor, I like this price action because it gives us time to accumulate. It gives our members a time to accumulate at much more favorable prices. And, if history is any guide, this is not going to last. Silver and gold have a long track record of thriving and prospering in this exact environment that we're seeing right now. Sure, there are still some short-term headwinds as the Fed continues to talk about taper, normalization of interest rates in 2022. Those are short-term headwinds, but from a longer, bigger term or macro perspective, we know that's not sustainable. Silver and gold always do a full accounting for the expansion of debt-based fiat currency.
ओके सो हम लोग आज का सेशन डिस्कस कर चुके हैं बहुत सारी चीज़ें। अगर आप लोग के साइड से कोई भी क्वेरी हो तो 2 मिनट का टाइम है, कमेंट सेक्शन में मेंशन कर सकते हैं। लाइव चैट आप लोग के लिए पूरी तरीके से ओपन है। कोई भी क्वेरी हो आप लोग सबमिट कर सकते हो। If there is any query from your side, you can just mention in the chat box or else you can type 100 in the chat box ताकि हम लोग आज का सेशन यहाँ पे एंड कर सकें और बाकी कल वापस से हम लोग लाइव सेशन देखेंगे जिसमें कि हम लोग लाइव ट्रेड भी करेंगे। सो हम लोग आज का सेशन यहीं पे एंड करते हैं और बाकी की चीज़ें हम लोग कल के सेशन में डिस्कस करेंगे। तब तक के लिए थैंक यू सो मच एंड आई एम एंडिंग दिस सेशन राइट हियर।